Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Well, hi there and welcome to the ISE FX Options Weekly Outlook for November 9th, 2009. As always, this is Jason Ayres of OptionSource.net. Let's take a look at our weekly US dollar index. Now, the US dollar continued on its descent against most major currencies. Despite an attempt higher this week, we're still seeing some indecision, making it increasingly difficult to be confident in a reversal. Now, 75 remains an important area for support. However, with a consolidation taking place up in the 76-77 focal zone here, a rejection could yield a move all the way back down into testing this 73-74 box. Now, a break above 76.5 opens the window for a test of the 78-79 focal zone. A move into this range would lend more credibility to the possibility of a US dollar bottom, at least for the near term. Now, once again, this downward trend line continues to be quite well respected. Our daily snapshot illustrates the consolidation that has been taking place within 76-76.5 focal zone. Now, the week closed with a pullback to test a measured retracement. We need to see that break and close back above 76.5 to be confident in the possibility of any bigger picture move to the upside. Well, the US dollar continues the recovery process against the Canadian dollar, as seen here in the ISE FX Options pair value CDD. The 106-107 focal zone held strong this week as the CDD appears to be forming a bull flag, lending further credibility to a push into this 109-110 box. Now, if the pair value breaks and closes below 106, then a retest of the 103-104 focal zone is a high probability. Next up, let's take a look at the YUK, the US versus the Japanese yen. Well, the US versus the yen continues to retrace as the pair value ends the week testing 90. Now, we are open to the possibility of a retest back down into this 89.5 focal zone. However, with 90 representing an important level, a bounce back up into the 91.5 range is a possibility. Now, we need to see a break beyond 91.5 for us to be confident in any bigger picture US dollar strengthening, recognizing that 92.5, 93 focal zone poses as a strong resistance as well. Well, the US dollar pulled back against the euro this past week, settling down to find support in the 67.5 focal zone. We can't rule out the possibility of a bottom retest at this point as the pair value continues to respect this downward trend line. 68 remains an important pivot point. However, there is still strong resistance up within that 69.5 focal zone. Well, the US dollar remains range-bound against the British pound as the BPX jostles between 60 and 61.5. Now, with the current trading activity appearing to form a bear flag, a break below 59.5 could conceivably yield a move all the way down into this 57 box. A bounce is most likely going to retest 61 to 61.5 with a definitive break above 61.5 likely meeting resistance at this 62.5 range. Well, after staging a bit of a comeback, the US dollar lost some ground against the Australian dollar as the AUX pulls back to test support at this 108.5, 109 focal zone. With this range being a measured retracement zone, a bounce here could extend up as high as this 112, 113 box. With the pair value continuing to respect this downtrend, we can't rule out the possibility of an extended move down towards this 106, 107 focal zone. Let's review our key points. First of all, the US dollar retraced back down towards 75 and continues to show signs of indecision. While this may be part of a bottoming process, the trend remains down. The CDD held at the 106-107 focal zone. Friday's strong close for the US dollar suggests that the upside momentum should carry the pair value into the 109-110 focal zone. The YUK continued to pull back, retesting an important focal zone. If the YUK holds at 90, a bounce is likely to test 92.93. We need to see a break beyond this level to be more confident in a continued dollar rally. The EUI attempted to push beyond 68 but failed. The pair value is testing a measured retracement. If 67 holds as support, we may see an upside continuation pattern forming. However, a break above 68 will lend more credibility to a more robust upside move for the dollar. The BPX has been consolidating between 60 and 61.5 for several weeks. It does appear as though a bear flag is forming. However, with 60 being a well-tested support, we need to see a decisive break below this level to support any further move to the downside. And the AUX failed to hold 110 and continues to respect the bigger picture downward trend line. Although the pair value is currently testing a short-term measured retracement, we need to see a break and close above 112 to support the probability of a bigger picture strengthening of the US dollar against the Australian dollar. And this has been your ISE FX Options Weekly Outlook for November 9th, 2009. As always, I'm Jason Ayres of OptionSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.